Hey everyone, Angela from Hometown Realty here, and today I am sitting with Ashley Colbert. She is with Myra Cannon and Associates, a nationwide agency, and we're going to be talking about your homeowner's insurance. It's something you are required to have when you get a mortgage. It is actually part of your mortgage. They figure out about how much your mortgage is going to, or how much your insurance is going to be, and it gets built in to the whatever amount they tell you you can afford. One of those voodoo things that, I don't know. But they do it and they figure it out. So Ashley, question for you today is homeowners insurance. What does it cover? Because I mean, it's one of those things that you have it, but you don't really know what it is.
Some things that you definitely need to look at when you're looking for home insurance is first the dwelling reconstruction cost. How much is your building really worth, and have you done any improvements to it? If you have, your home is going to be worth more, and you need to talk to your agent about that and make sure if you've done improvements that they're covering for that reconstruction cost as well.
So reconstruction means if the house burns down, to get it built back up to exactly the way it was.
Exactly the way it was.
That's what that is.
Exactly. So if you're adding, crown molding or a deck or anything like that, we want to make sure that you have everything back the way that you had it before.
Okay.
We just want to get you back to where you were.
What are some other things that come into play with the amount of your homeowner's insurance?
Absolutely. Coming off of your dwelling reconstruction cost is going to be your personal contents. It's a percentage of your dwelling value, but you want to make sure that you have enough of it. So a good example to use is if you were to take your house and turn it upside down, everything that were to fall out, do you have enough money in your personal contents to cover that? And if not, that's another speaking point to your agent. Discuss, maybe you have too much in there, maybe it needs to go down. There's a lot of adjustments that could be made, but we want to make sure that you have your stoves and your appliances and your
TV,
personal property.
Clothes.
Exactly.
So if you have a shoe collection, you got to make sure you have that included in there.
Absolutely. And another part of it happens to be jewelry. So if you have jewelry, watches, or furs, you certainly can schedule them on your homeowner's policy, but the better way to do it is to have it on its own separate policy. That way you can apply deductibles and you can have a lower price premium with those deductibles. So jewelry, watches, and furs and special items that are valued to you and your family may need to be protected under a different policy.
Okay, so you mentioned deductibles.
I did.
What is a deductible? I mean, all I know is that that's pretty much how much I have to pay out.
Yes. A deductible, in the case of a claim, a deductible is what you would pay out before the claim can be taken care of.
Okay.
So deductibles at standard are about $500 to $1,000 and above. Of course, the lower the deductible, the higher your premium throughout the year.
Okay.
And the higher deductible, the lower your premium. But what you need to ask yourself is, if something catastrophic and unexpected happens and you need to make a claim, are you comfortable with the amount that you have set as your deductible?
Okay.
You may want to set it really high to keep your premiums low, but if something were to happen, do you have that easily available to you?
Right.
You kind of want to make sure you have a good balance there.
Okay. Sounds good. All right. Well, Ashley, thank you so much. And if you have any other questions, Ashley's information is coming up. You can give her a call. She's always happy to help you. Talk to you soon. Bye-bye.
Thanks, Ashley.